Thank you very much. It's my pleasure to be here today. I came from Montreal. I'll talk to you about the institutional piece of venture capital, but Carmen's presentation spoke to angels, and I must say we get a lot of press. A lot of people talk about VC. If you were here this morning, I must have come up at least a dozen times talking about venture capital, how negligent we've been in not funding all these companies. So I'll talk to you primarily about the economics of venture capital. So if you're a venture capitalist, what do people expect from you? And now that'll allow you to understand a bit better how we invest, why we do the things we do. I'd also talk a little bit about BDC and come up with a few conclusions. So the mission, just a little bit about BDC. So we have our goal in life is to help entrepreneurs. We're a federal crown corporation. We have about 28,000 clients across country, mostly small, medium business, very small in some cases much bigger. But we really do deal with entrepreneurs, mostly on the financing side. So if somebody wanted a loan with very little in the way of guarantees for working capital, for equipment, they come to see us, and we very often say yes. We've got the risk calculation piece down very well, having been in this since right after the war. We've got over 100 business centers across Canada and $17.7 billion at work. In terms of the venture capital piece, we've been investing since 1975. That makes us one of the oldest venture capitalists in Canada. We're a major risk provider. We've invested well over $1 billion since that time. We focus on biotech, clean tech, IT, and we put out about $100 million a year. If you look at the March 31, 2011 numbers, we had about $480 million deployed. Some of that is indirect, and some of it is indirect because everyone has been decrying the lack of venture capital. We can't do it alone for sure. So what we do is we invest in other VC funds, and in that way create other funds that can co-invest along with us. That's very important because the industry, I'll show you some stats in a minute, the industry is not doing well, returns have been low, and fundraising has been drastically reducing, so it is an industry that is suffering. Just to let you know, we're in it for profit. Newsflash, venture capital is in it to make money. We've co-invested with well over 40 or 50 US or international VCs throughout time. We were behind companies like Creo, Tundra, Virochem that was sold to Vertex for over $450 million last year, a couple of years ago. Made $38 million profit on that. Radian 6 recently was sold, again, same type of profit. Miranda Technologies. So we've been behind some very successful companies, and we've been behind some huge failures as well. That's part of the business. I'll explain that in a minute. Right now we have companies, we sold Resonant to Electa last year. It was a tumor localization patient positioning company. Profound Medical, treatment of prostate cancer. We're investors in IHS, Intelligent Hospital Systems, which is a robot that prepares IV mixtures. That's a Winnipeg company. We're still a shareholder in Novadac. We went in before they went public. We're an investor in Monteris, which is a device to treat solid tumors. We're an investor in Interface Biologics, which is an anti-thrombogenic device company that's doing very well, so you don't need heparin when you put in catheters. So we are very active, and those are promising companies that we think have a very good potential at success. I had to steal this from the Institute for Health Technology Studies. And again, may have been there recently, but I just love this quotation. So medical innovation will not benefit patients unless you can build a successful business around it. And I think sometimes we lose sight of the fact you have to build a business to innovate, because having innovation is one thing, getting it out to the market is quite another thing. And the speakers from this morning and the last panel all did a very good job of explaining what you need to do. But the bottom line is that you have not only the risk of starting up a business, and we know not very many businesses make it past 5 or 10 years. Most of them fail. The majority of them fail. If you superimpose upon that technology, clinical, regulatory, you can very quickly appreciate how difficult it is to make money in this business. So hats off to the Scott Cameras of the world, and Frank Bales mentioned a company that's doing a device for to check if there's been bleeding after a head injury. Companies like that that are setting out to make a go of it, you know, they have a lot of courage as entrepreneurs. So. I don't need to go this. I think the previous panels spoke very eloquently about what's required. Also, there's some statistics at lunch. It's a huge industry. A great number of companies, dominated by several very large companies. In Canada, number I saw, one of the stats was 2,500 companies. That strikes me as a bit high, but there are quite a few small and medium businesses. And a lot of them, of course, if you can make a go of it, the gross margins are interesting. You do have to spend a lot of money on R&D because product obsolescence, you cannot stand still in that business or you will be run over. But some of those numbers explain why there's still an interest in for venture capital to invest in medical devices. So this is the slide I'm going to concentrate on because it'll give you a little bit of a better idea of why we do things the way we do them. As I said, we're in it to make money. So a private fund would go see Caisse de dépôt, would go see teachers and OMERS, those large pension funds who manage tens of billions of dollars, and say, I've got a deal for you, invest in my fund, and I'm going to make all kinds of money for you. So the decision maker is going to sit and say, well, I've got public equities, I'm in and out on a daily basis. If I want to, I can invest in stocks or bonds that give me some modest returns, but I can get out when I want to. I can do real estate, mining. Okay, so why should I invest in you, private venture capital? So you've got to have a pretty convincing story when you say, I'm going to invest in medical tech companies and I'm going to give you a return of 15, 20, 25%. So that's tough. So you got to explain that. So then you usually have the phenomenon called a JCurve. So you invest in a company and usually things go not poorly, but you're developing, you're spending a lot of money, consuming cash at an alarming rate often. And before you start hitting your stride, if ever you do, it's probably 3, 4, 5 years down the line. So at that point, if you've done a lot of investing as a new fund, the net value of your fund has dropped and you've got to start explaining, although they expect that. But it's quite a few years before you actually see returns from this. And it takes, I would say on average, we've seen 5 to 15 years before you get out. It's a long, long play. So you're in a partnership with an individual, a group of individuals. You're really married to each other. Oftentimes, the founder retains a very small piece of the company, and the VCs might have 60% of the company or something like that. You have no interest coming in. It's strictly about capital gain. So at some point, you have to sell the company or go public, ideally go public, because unfortunately M&A in Canada has often led to sale to a foreign company, and oftentimes the decision-making moves. So trying to build a Canadian industry, and for our kids and for all these young graduates here, it would be important to build that as opposed to more mundane jobs. So they're nice, high-tech, high-knowledge jobs, so it would be nice to keep that. So if we had a few RIMs we could create every year, that would be phenomenal. Unfortunately, the conversion rate is poor. So after all our savant calculations, we are only right, VCs are typically right once or twice out of 10. That's about it. But if you hit those right and you have a huge return on them, it will pay for the ones that do not do what they're supposed to do. And definitely, you always need more money than you figure. It's always longer. You double the expenses you see, and you double the time it takes you to get to the end point. Just quickly, in the U.S., $22 billion invested eventually. Still a lot of money. It's about 3,300 companies. If you compare that to Canada, in all sectors, it's $1.1 billion. It had at its peak been about 1.5, 1.6. It's down to about 1.1, 354 companies. Typically, about a third of that goes into medical type, life science type companies. More alarming is that the fundraising is at its lowest level in 16 years. So $819 million was raised only in Canada last year. Very alarming statistics. Some of that is the labor-sponsored fund who've gone away because of legislative changes. But that means that 2 and 3 and 4 years from now, those people, there will be very little money to invest in venture capital. So that's kind of an alarming number. one stat I would give you on the M&A side, so when I talked about exits, if you look at the multiples here, this is one study that was done, and I think it's probably December, not March, December 2010. The average multiple, this was six companies, the acquisition multiple was 0.5 times sales. So remember what I said a while ago, to get out, you need to make 10 times your money or 40 times, as Carmen was saying. If you're selling, after all that hard work, you're selling your company for 0.5 times sales, you're not making a huge return on that, that's for sure. Typically, it's more 3, 4, 5 times. We just sold one last year to Elekta, a Swedish company, and they paid 10 times sales because they absolutely love the technology. So, but those numbers there are quite alarming. Why is medtech still popular? So demographics, the products, there's some new exciting areas. Healthcare cost containment, many people spoke about that. Now European regulatory pathways with the FDA tightening up, a lot of people are looking to Europe to get their products approved and to market. And if you compare to biotech, which requires sometimes $100 million to develop, you can do a development for 30, 25, 30 or less, ideally less, because again, if you want to say make a 25 to 30% return, you have to triple in 5 years. So if you put in $30 million, you have to triple. That means that $90 million you have to sell the company to get your 25% return. If you put in $50 million, you got to sell for $150. So less capital, the better, in a sense. The risks, we talked about the increasing time, expense, and uncertainty of innovation. China, India, Brazil, Israel, a lot of VC firms from the States are forming funds in those countries. Perhaps at the expense of Canada, but there's certainly a lot going on over there. In the market in China, you have 120 million people who are over 60 years old. You've got huge markets, so lots of reasons to go there. You've got biotech. If you can grow an artificial bone, a femur, you may not need the device to put in anymore. And of course, unlike if you're selling $2.5 billion worth of Vioxx at an 85% gross margin, you don't have blockbuster knees. You're going to sell a few knees, but you don't have those huge wins. So the conclusion, I would say, is there a reason to continue investing in Canada and medtech? Absolutely, there's some very, very good talent in Canada. A few of the speakers mentioned that. What would cure the VC problem? So why don't you guys invest more money? It would be to have profitable companies, which means successful, not flash in the pan, a good, steady, sustainable company that grows and continues to develop new technologies. Ideally, can go public and remain here and raise more money through the public markets. I think we will need, though, to come up with innovative, not only technology, but funding models and economic models. So that means partnering up with big med tech companies. We've seen that more and more. And I think bottom line, again, good talent. We will continue to invest. There are a few people left. I think the worst is behind us. I sincerely hope so. We need a little bit of luck as well. But I encourage people to continue to work hard and we'll make some money collectively. So I'll end on that. Thank you.